Hi, my name is Barbie Enrico, and I'm here to welcome you to Pitch Tips Zoomcast, and where venture capitalist Fred Haney gives feedback to CEOs of startup companies to help them raise capital. Fred is an experienced venture capital fund manager, angel investor, entrepreneur, founder Monday Club, and author of The Fundable Startup, one of the best selling books about startup companies getting funded. So let's find out what Fred has to say to today's CEO.
Hi, and welcome to the Pitch Tips Zoomcast. I'm your host, Fred Haney, and I'm here because I've been involved with hundreds of startup companies, 6 as a co-founder, and I've had a lot of successful exits. So I've learned a little bit about what it takes to get startup companies funded, and that's what we're going to talk about. The concept here is that you get to be a fly on the wall in a conversation between a couple enthusiastic founders and venture capitalists, that would be me, and you get to watch the dynamic of the pitch. So our guests today are Pat Fuscoe and Peter Allen. I hope I said that right.
Appleton.
Peter Appleton, apologies. Actually, I'm going to back up on that because I can edit that. Our guests today are Pat Fuscoe and Peter Appleton, and they're going to describe their company in some detail. It's called Earthwise Global, and we'll give them a chance to give a quick little summary, and then they'll do a short version of their investor pitch deck, and we'll ask questions and comment on that and see if we can help them improve their chances of getting the company funded. So why don't we have Pat, go ahead and give us just kind of the 1 minute version, the short elevator speech version of what you're trying to do. And then why don't you both introduce yourselves and tell us a little bit about your backgrounds and how you got involved with this project.
Okay, well, first is the one sentence bullet on the company, Earthwise Global Incorporated. It's a company that makes and operates machines that emulsify nanobubbles into water, which deliver oxygen or ozone that feeds and nourishes food crops, or can act as a powerful disinfectant in a completely safe manner. That's one sentence of the company. Now, I'm Pat Fuscoe. I'm the chairman of a board of advisors. There's several of us, including Sarah, who's listening in. And we've been on the board for about a year. We're also investors. And Peter Appleton here is the founder. I personally am a businessman. I operate a 200-person engineering firm in California. I've done it for 50 years. Peter, do you want to say something about yourself?
Yes, Peter Appleton here. My background is in agriculture and aquaculture. For the last 35 years, I've been working in over 80 countries around the world for US government projects, World Bank projects, and trying to look for new applications and new technologies that I could bring to the agriculture development world. And that's where I ran into, in work I was doing in Japan, where I ran into the concept of nanobubble technology and what it could do to enhance the growth of plants up to 30 to 40%, sanitize fruits and vegetables and other produce and meats and fish, and all do this without chemicals. And in the world of the pandemic and the high use of toxic chemicals such as Clorox and PAA, which is used in washing fruits and vegetables, I think our time has come. Thank you.
Okay, sounds great. Well, listeners, so you'll understand the thought process here. It's important for you to understand that a venture capitalist has a terrible time management problem. Every venture capitalist that a startup company is going to pitch to has 50 or 100 business plans on his desk. And his phone is ringing off the hook and he's on 10 boards of directors. So he's got a real problem of managing time. And one of the things I learned early on when I was managing 3i Ventures is that there just wasn't enough time for me to get all enthusiastic and excited about every fun project that came along. They're all interesting, they're all intriguing and fun, but the venture capitalist, if he's going to manage his time carefully, has to think the other way around. He has to, if he's going to say no, he has to say no fast. So his whole challenge in life is, how do I get through that stack as fast as I can and say no as quickly as I can? So the mental process is, if this company is not going to make it for some reason, what would the reasons be? What are the issues here? What are the potential showstoppers here? So you make your list as a venture capitalist, and then you go back and work your way through each one and try to get comfortable. Can I get over this? Is there a solution to this problem? Is there a way to manage around it? Is it something we just have to live with? And if there are too many that we can't work through, then it's probably not a deal we want to do. So that may sound like kind of a negative thought process, but please understand, in the context of venture capitalists trying to manage their time, it's important to understand that thought process. So Pat, why don't you go ahead and walk us through in a little more detail what you're planning to do.
Okay, well, I have 11 slides to share, and I'm following, Fred, your script. You have 10 questions you've asked me to answer in 3 minutes. So I think I can, but it's...
And I understand that's impossible, but that's the truth.
No,
We'll try.
So here goes. Let me share my screen. This is the problem we're solving, okay? There's a huge world food shortage today. 250 million people are starving worldwide. It's a bad deal. But by 2040, we have to double our food output just to stay even. And we waste 40% of our food production today. Secondly, and Earthwise can help in that problem. The second problem we're attacking is contamination. 1% of the world's water is drinkable, and our overcrowded livestock farms are filthy with bacteria, pathogens, and biofilms that can only be cleaned today with chlorine. So our company is aimed at growing food faster, getting increased yields, and making healthier plants by applying the nanobubble water to the crops. Secondly, it can extend shelf life on produce and markets by killing bacteria. And lastly, it's a perfect sanitation disinfectant. So those are the three things we intend to do. Our goals, this is a diagram of the system that Peter has invented that delivers the nanobubbles with ozone. And that is our proprietary value add, is the formula for mixing ozone and other gases into these tiny bubbles. And secondly, to sense the weather, the temperature, the pH of the receiving area and adjust and optimize the delivery of it. Another benefit, it decreases the water use and the power use in these environments. So this is clean, is what we call it, the disinfecting thing. If you go to a typical dairy in Vermont, where Peter has a machine going right now, it can clean the whole dairy to OSHA standards, lickety split, without any harmful chemicals. Imagine the produce in supermarkets, after 3 days, they throw it out. It's all wasted. What a shame. If we spray it with our emulsified water, it'll last for weeks. Our markets are huge. The food industry in the United States is $15 billion itself. There's no competition in this space. There are companies that make machines that deliver nanobubbles, but that's it. You have to operate it yourself, and it's just putting oxygen in, not special gases like we are. We expect to grow financially in the next 5 years quite well to about 25 million. And we have a good EBITDA plan. So we're interested in getting some startup investment of about $500,000 that can get us to get a CEO, a CFO, and a sales manager and get the production going. So that's it.
Okay, good. Wanted to take off the screen share.
Sure.
So one question just to pick up on your ending there. You're going to use the funds to get the CEO, CFO, et cetera.
Yes.
Are there already some worker bees involved in the company, are you building the company top down, or are you building it bottom up?
Top down. We want to get a CEO first off who can bring a team with them. We already have two candidates lined up who have offered or expressed an interest, and they would bring a team in, and we can get our production scaled. That's the goal.
So
right now it's Peter and his spouse Marion are the two employees.
And what would the CEO do? What would his first few tasks be?
Well, we want to build hundreds of these machines, not just a few at a time. So we need to contract with some machine suppliers and establish a supply line of hundreds of machines a year. Secondly, we want to install them in our customers' farms and dairies and markets. So we need a team of installation people to do that. Once we have the production going and the installations, we can add value with the software, the AI. We can collect data and add value that way as well. That's where the CEO and managers would come in. So fundamentally, it's production, distribution, and operation.
And I'm sure you've wrestled with this issue. Every company faces a whole series of chicken and egg kinds of problems. Yeah. One chicken and egg problem you're probably up against here is it's hard to get a CEO without capital. It's hard to get capital without the CEO.
Yeah.
Another way to parse that is to say it's hard to get a CEO without having built some value in the company, and it's hard to build value in the company without having the CEO. So one hard question to ask, I think, and again, I think you've asked and answered, but sometimes it's instead of building a company from the top down, hiring a CEO, for example, sometimes it's better to get a bunch of worker bees and get something built and go out and get some customers and create a little value. If you're able to do that without capital and without a high-powered CEO, it puts you in a better position to attract both the capital and the CEO. I mean, have you thought through that issue?
Well, that makes sense, and Peter and Marion are doing that. So if we continue just the way we are, like you're saying, we have our worker bees building the machines, installing them. We might get a dozen or 2 dozen installations this year. So it's a successful trajectory, but it's a long ramp. We want to accelerate that. That's why we want scale.
And that's a good thing if you can do it.
But we have worker bees doing that now, yes.
So another comment I would make, and you're not as guilty as some startups, but you're using some technology words that a lot of people probably don't understand. The safe assumption to make about any investor, venture capitalist, angel investor, is that they're lay people, basically. They're not big on technology. So you might want to explain to people what a nanobubble is.
Oh, yeah.
And I know in a 3-minute presentation.
It's okay. That's a fair question. And it's one that I asked Peter the very day I met him. I didn't ever hear of nanobubbles. I didn't know what they were. And Peter's best to answer it, but they are essentially bubbles injected into a liquid like water that are so small They're the size of molecules. It's hard to believe. Okay, they're so tiny you could never see them without a powerful microscope. They're so tiny that they don't burst. They stay emulsified in the water for a long period of time.
That's the other technology.
That's a nanobubble. So,
But emulsify is another word that people aren't.
well, it means saturate the liquid with bubbles. So it's throughout the liquid. Like when you drink a glass of Coca-Cola, it's got carbon dioxide bubbles all through it. But the bubbles themselves are not anything terribly new. It's pretty new. Last 5 years, they came out of Japan, the technology, but are generally used to just simply, the bubbles move around. And so the Japanese are using it to remove biofilms and things. So slime that grows on surfaces. They can spray it with the water with the little bubbles bang around on the surface and knock the bad stuff off. That's all they're doing with it. Peter had the insight to realize that these little bubbles could be mechanisms to deliver something else, but something, you know, like that nourishes a crop, for instance, or can disinfect. And that's the proprietary answer. So that's what a nanobubble is and how we're using it.
And we need to keep answers pretty short here.
I know, I'm sorry.
Follow-up question there is, sounds like there's hard evidence that this works.
Yes.
Are you able to quote that and convince people that it's been demonstrated to be effective?
Yes, we have white papers. There's a lot of academic university work that proves it, and the country of Canada has hired Peter to apply it. And so, yeah, there's a lot of documentation and published materials that confirm the effectiveness of nanobubbles.
One thing I think you want to be a little cautious about in today's world is you had some statistics about the number of starving people and the needs to increase food crops and those kinds of things. The world has been exposed to a lot of forecasts about that kind of stuff that haven't worked out very well. I mean, you know, we were supposed to have run out of food in 1972 or something like that, I think.
Sure, yeah.
You want to be cautious. I think people are going to be a little on alert when you throw those kinds of numbers at them. I would make sure whatever numbers you use, and I'm sure it's pretty easy to come up with compelling ones, but I would make sure to explain the basis for them. You know, where'd that come from? How do we do that?
Sure. Yeah.
How can we be sure that that's not another
just
forecast? Yeah, it's just something to be.
I understand. So the fact that I stated earlier about the need to double our food output by 2040 is printed and reported by the United Nations in a report that I can give to anyone if they want to see it. And it's simple to understand. I don't think anybody would be skeptical. There's 7 billion people on the planet today. There'll be 10 billion in 20 years. They're going to be hungry. So we need more food than we have today. That's all.
Yeah. Okay. Fair
All
enough.
right.
Pat, you mentioned both software and artificial intelligence.
Yes.
How does that come into play here? What role do they play, and how important are they to what you're trying to do?
Well, it's kind of vital. It's what differentiates this company. Peter had the idea to make the nanobubbles out of ozone, which is O3. Now, once you spray that on a plant or put it in a hydroponic tray, how do you know it's doing any good, and how can you optimize it? So Peter has used software and algorithms to, he's basically putting sensors in the hydroponic trays or on the ground that measure pH, temperature, weather, salinity, all these variables, and send the data to the AI piece of the machine that then adjusts the amount of ozone being injected based on those sensor data. Does that make sense?
Yep.
Okay, so nobody else is doing that. They're just putting bubbles into the water and seeing what happens.
I'd like to take a little step back, not too far. I'll keep it short, Fred. Uh, Nanobubbles deliver gases. They're a highly efficient system of delivering gases in liquid. We deliver our gases in liquid, but what we're really interested in is what impact gases can have in agriculture. What we do know from an agronomic perspective is that agriculture, the plants of roots, require oxygen at the root level in order to uptake nutrients. That's why we tell people in the springtime, go out and walk, put your golf shoes on and aerate your lawn. Allow oxygen to get to the roots of your plants. We take that up to a high level. We deliver water to the plants that have high levels of oxygen in it. As the oxygen hits the plants, it allows the plants to take up and use fertilizer and other nutrients much more efficiently. That decreases the cost of fertilizer. It decreases the cost of impact on the environment. When we change the gas to an ozone gas, because in food industry particularly, we're worried about foodborne diseases, Listeria, E. coli, Salmonella. Yeah. And right today, what we're doing is we're throwing chemicals at this. Well, there's a natural chemical, a natural gas called ozone, which is a derivative of oxygen taken from the air that we apply through a misting effect through our bubbles, and we kill 99.9%, the same level as the FDA requires from any sanitizing effect, the same as it was for chlorine or any other acid that's being used in a vegetable or fruit or meat wash today. So what we're doing is we're taking gas from the air, a no-cost, no-cost gas, applying it, one, to help plants grow, and two, to sanitize and increasing the shelf life and kill pathogens. The system is really an integrated system. We basically do the application, but we also have algorithms we have developed, formula, recipes for the application. And what we do is we monitor that through AI and a series of sensors that Pat has referred to. At the end of the day, we increase yields and we optimize the use of all inputs, including not just for growing, but for sanitation.
And it's we've applied for a US patent on the software and the operational aspects of the machine.
That's right.
Okay, great. Well, just to summarize a couple things that popped to mind, I think you run some risk with your strategy that when you present to investors, they say, come back when you've hired your CEO.
Yeah.
You know, I mean, again, it's a chicken.
Yeah.
Investors like to know who's going to be running the company. So
Okay.
The alternative there is to see if you can find ways maybe to expand what you're doing already. If you can do both at the same time, that's great. I mean, you can talk to CEOs. If you can find somebody who's willing to come in and do it, who has the right kind of background, that's great. But you want somebody that is going to help you attract capital, because the investors think.
Understood. Yeah. We actually have a interim CEO in the waiting, Fred. So I guess we'll move that forward.
And I think your presentation is pretty clear. We pointed at just a few words that might go right over people's head. I think you want to be careful that you define carefully and explain the words that you use. There also are probably some pretty critical measurements important in what you're doing. You want to be sure and explain when you say something's better, how much better is it? How do we know that? You know, quantify as much as you can.
Yeah, right. So, for instance, on the grow aspects of the plants, you know, Peter's actually tested the machines and measured the impacts. It's something in the order of a 2 to 4x on output. So if you're growing cannabis or tomatoes and you can double the output of your crop with the same cost, that's a pretty good deal. So that's a metric, 2x.
Yeah, no, that's pretty spectacular, but
Yeah, it is. It's very exciting.
you want to have a basis for that. You know,
Yeah, I understand.
a VC or, you know, the angels, they're going to send an associate over and say, okay, prove it to me.
Yeah, we're happy to.
Yeah.
And
So
so I'm answering. So there's the three things: is grow, fresh, and clean. Fresh is a little harder to measure, but when you have produce displayed in a supermarket, they spray it with water, and in about 2 or 3 days, the produce starts to age. People will not buy an apple if it has a tiny speck on it. They just don't. So they throw it out. We can spray the same produce with our ozone water, totally harmless, and it'll last 3 times as long on the shelf. So again, it's a 2 or 3x. And lastly is the disinfecting thing. That's a little harder to measure, but when you kill off pathogens and bacteria in a dairy, OSHA likes that. And so it's hard to measure. To take a filthy, contaminated livestock farm, spray it down, and now it's all clean and nice. The milk's healthy. That's a harder thing to measure, but we know it works. It works equal to chlorine bleach without any of the chemical impacts.
Having live examples and live proof is fine. I mean,
Yeah, that's all we could do. Yeah.
Situations, that's fine. So I would also comment that you brought up the software and AI kind of late in the presentation. I think you want to be real clear. If that's really an important part of what you're doing, you ought to mention it much earlier.
Okay.
If it's incidental, then leave it where it is.
No,
but and somehow you want to quantify that too. How much difference does that make? Does that make it 10%, 20%, 30% better? So what's the impact?
All right, thanks.
And then final comment I would make is that your $25 million revenue target is probably okay for angel investors, probably not okay for venture capitalists, but I think you should be targeting venture capitalists anyway. It's probably
we're not, but I agree. Yes,
but
25 is a minimum threshold, I know, for VC.
But if you go out and raise the 500,000 that you want, is that all you're ever going to need, or are you going to need additional capital?
No, there's 2 phases to the funding that we're interested in or asking for. Phase 1 is the 500,000. I'll call it seed capital. It's enough to get the company launched and going. And then it's just a matter of scaling it up. So we would like to get another 4.5 million as a second round, maybe later in the year, that would scale the business completely into the California agricultural market, which is the biggest in the country, and the rest of the nation. So that's what the 4.5 would get us into all the markets. And then after that, I don't know. You know,
it's important to mention that, because what an angel investor is sitting there thinking, how am I going to make my 65% return on investment here? Which means, how am I going to get 10 times my money back after 5 years, or however it works out?
Right.
So what they're thinking is, so fine if I start out owning a percentage of the company, 20% or something like that. What percentage am I going to own when this company goes public in 5 years, or when the company gets acquired in 5 years? Is it still going to be 20%, or is it going to get diluted down to 10% or 5% or 1%? So you have to you have to explain that whole picture. You have to give them the whole story so they know what kind of future dilution they're looking at.
Now, Fred, I have one question on that. That's the exit strategy. Is that something investors want to hear?
I think what they want to hear primarily is that there will be one.
Yeah. Okay. Yeah. Right. All right. Well, we've had on our board, we've wrestled with this. Some say no, and not to say anything.
What they wouldn't want to hear is, oh, we love doing this, and it's going to be a family business. And do it for the rest
I know.
that doesn't do them a whole lot of good.
I know. Okay.
and they don't want to just pour their money down the drain and never have a way to get a return. So the important thing is your intent. And I'm saying that kind of carefully because.
Well, let me be real specific. So we think that in 5 years, this company will be very attractive, okay, to large food corporations, Frito-Lay, the giant food companies are going to want this. So that's probably what happens to the business. At some point, they will become big customers of ours. I don't know, Peter, some of the other big names, you can say who they are, I forget, but the big food guys like PepsiCo, Frito-Lay, all these guys, they're going to be our customers and they're going to say, gee, we should just buy you.
How about the guys who make fertilizer?
Well, them too, that it could go in one of three directions. There's the food distributor and sellers. They're huge and they would be interested because they can add value in their food, in their chain. Then there's the food producers themselves. And then there's this disinfecting thing, which could actually be a separate entity at some point. It's a separate market, but it's in the same environment, farms and livestock and what have you. But it gets onto water quality. Like you could have a polluted lake, like Lake Arrowhead, and you could stick a hose in it, run the ozone bubbles through the lake, and it'll clean the lake up. That's a new market, for this. Wineries, breweries, they all recycle water very expensively. This would be faster, better, and cheaper. So there's a fork in the road where maybe 2 or 3 entities can exist.
Yeah. So, look, to answer your question about exits, I would tell that story. I mean, it does several things. The problem about exits is they're very difficult to plan. You can't really plan an exit. And when companies come along and say we're going to go public in 5 years, my answer is, how do you know there's going to be an IPO market? I mean, it only exists about a third of the time. And so I think, A, to say we do plan to exit, and B, at an appropriate time, we think these are the kinds of companies that would be interested in acquiring us. I think that's fine. I think that's a positive to investors. Is it going to be 5 years or 4 or 10? Who knows?
But it's a direction. Yes.
In just to make the point, in 2010, I received a very nice carried interest check, percentage of profits that 3i made on one of the investments that my group made in 1988. So it was 22 years.
Yeah.
Now that's the outside, but everybody says we want an exit in 5 years. It rarely happens. I would say 7. I'm just guessing, but I would say 7's closer to an average.
Okay, fine. It's fine.
But just expressing a willingness and having sort of a plausibility argument that said these kind of people could be interested.
Yes. Yeah. No, I got it. We'll share some names.
Okay. We should wrap up.
Is there any other advice on competition or the markets? I just glossed over the food market, $15 billion a year. Is that enough, or do you think more detail?
Just quickly, I would say competition is probably one of the most important things. We didn't spend much any time.
No, that's why I'm bringing it.
One of the most important things that investors are going to look at, and we don't have time to dig into it now, but it's good that you raised the point. You want to. The important thing when you address competition is to answer the question that's being asked. The question is not which company has more checkboxes.
Right.
It's not, do you have more checkboxes than the other guy? The question is, how is this problem being solved today what's the competitive environment? What's the dynamic of competition within this industry? What's the basis for competition? Is it price? Is it service? Is it quality? Is it effectiveness? What are the things that really make it work? And then what are you going to have to do to position yourself within that space as a winner? We also didn't talk about market size or market share, but when you're dealing with large markets like you are, I don't want to hear all we need is 1% of the market. What I want to hear is, here's how we define the market where we're going to have a 25% or greater market share. So segment down, narrow your definition, and tell me what market you're going to own and how you're going to do that based on the competitive dynamics. The Bible for how to analyze competition within a market is Michael Porter's book, Competitive Strategy. If you haven't read that, you should. It really lays out the thought process for how you think through competitive position within an industry. Peter and Pat, we need to wrap up.
Yes.
Thank you for a well done presentation. It was good to be with you. Listeners, be sure and come back and follow us again. We're posting these on a fairly regular basis on our YouTube channel. Subscribe to the channel, and we hope it helps you improve your chances of getting funded as well. Peter, thanks for being with us.
Thank you.
Pat, thank you for your leadership.
Thank you, Fred, for having us. All right. We'll see you in May.
Good. Yeah, you're going to present to Monday Club.
We'll see you.
We'll look forward to that. Thanks very much.
Thank you very much. Thank you.
Cheers.